Good evening and welcome to the Finsightful Wealth YouTube channel, coming to you on this Tuesday evening. I hope everyone is still liquid in their crypto portfolios and they were not too over leveraged. The volatility that we experienced last Friday evening and all through the weekend has wiped out more than $19 billion worth of positions. Initially, we had the big push up to make all new all-time highs, and so that wiped out a lot of the short liquidity. So a lot of the sellers that were thinking that we were going to get sold out there. And then what we had after Trump's tweet in and around the tariff, the 100% tariff coming on China for them not meeting with him, that created a cascade in both public markets and then also in cryptocurrencies. And it actually showed some, I guess, cracks in the system around where some exchanges could not provide liquidity. And we had significant amounts of pricing differentials between different centralized exchanges and decentralized exchanges. And then also with the USDE issues and that really having a liquidity crisis really sent BTC tumbling, and the biggest one-day wipeout or basically annihilation of wealth that we have ever seen in crypto. So it was bigger than FTX. It was bigger than Luna. It was bigger than FTX and Luna combined. And the trigger for it all was not necessarily Trump's tweet, but just too many retail investors way too leveraged in the market. And then Trump's tweet was just the, I guess, the straw that broke the crypto markets back and sent markets absolutely into a free fall and tumbling. But when we think about the exact amount, well, before I get into that, I guess one of the key things that everyone should be learning from this particular point going forward is that the use of leverage is a double-edged sword. So what goes up does definitely come down, and having a leveraged position which allows you to have outsized gains or leveraged gains then also provides, the leveraged losses. So your capital, the position sizes that you have and the capital, when a position moves against you, you lose money a lot faster than if you just owned spot. And so what people have the ability to be able to do, particularly with crypto, is you can use Bitcoin or Solana or any other cryptocurrency, Ethereum, as collateral for you to be able to then go out and trade. And so what a lot of traders do is they have their spot portfolio sitting on their exchange, and then they take out leveraged positions, shorter term leveraged positions, to then try and get some outperformance, or they try and get more income, or they're just trying to generate the maximum returns that they can. But what happens when the entire market drops 20%, 30%, then your capital that you've utilized to take out all these leveraged positions reduces. Then the leveraged positions that you are then holding are also going against you, so you're losing that capital faster. So the actual capital that you have is being reduced because it's in your spot holdings, and then the leveraged now losing positions are taking even more of that capital away. So you get to a point where the exchanges will then just liquidate your entire holdings because you do not have enough capital in your account to maintain the loan that they've given you to be able to cover those losses. And unfortunately, there are globally hundreds, if not a couple of thousand crypto natives or people that have been in this industry that have taken their lives because of this particular crash. Like, there are literally hundreds of there are many people who have lost millions of dollars, if not tens of millions of dollars. I know an associate of mine, his balance at the end of the weekend was like negative $9 million. So there have unfortunately been some people that got caught and had extreme measures against them. So unfortunately, we didn't have a lot of leverage positions on at the moment. Yes, our spot took a hit, but when we saw those bottoms, when we saw it started bottoming out and more buyers coming into the market, we were able to take some long positions there and participate in that bounce. And so this is the thing with any type of investing, is that you need to ensure that you are managing your risk. The most important thing with investing and trading is that you do not lose money. Because if you have $1 and then you make 10 cents, you made a 10% gain. If you have $1 and you lose 85% of that, you now are only left with 15 cents. You need to double your account, 4 or 5 times. So you need to get 100% return 4 or 5 times to even you to get back to the original position that you were in before. So I guess let this be another lesson to all of us in the crypto sphere, out there trading, out there investing, out there hodling. You need to be mindful of how you're trading. And if you're trading leveraged positions without having some sort of stop or some sort of exit already locked in within your portfolio, then you are mad. If you are holding leveraged positions, you should have either a trailing stop, a swing low stop, just a straight stop loss, where that if a position goes against you, that is the maximum that you are going to lose. And to think that there were people out there trading with hundreds of thousands of dollars, if not millions of dollars of positions open, and not having these very, very rudimentary, very, very basic trading plans and criteria in place for their portfolios is just wild. Public markets can gap down overnight because Trump says things, or things happen outside of when markets are open. But because crypto trades 24/7, you've got to make sure that if something happens overnight, that your positions are protected. So I really hope that everyone watching this hasn't been too negatively impacted by what's happened over the weekend. But let this be a lesson to everybody that you are trading at your own risk. Volatility is a real thing, and massive shifts in sentiment and that make markets move exponentially will happen. Even though we have all these institutional investors and this institutional money flowing into these markets, prices will move dramatically due to news and things happening. And we are living in very volatile times, particularly with what's going on in the global network. So let's just have a look at a few charts. So this is a chart of gold, and it's really just performing admirably. Again, it's just going to all-time highs. Obviously, with the volatility that's happened in the last 4 or 5 days, we've seen gold spike up even more. I was over the weekend, I was at a educational course, Sharpening the Sword. And what that was sort of teaching is to have a look at your longer term timeframes to really get an understanding or get an idea of where you think the market is. And so when you zoom right out and you look at something like gold, we have just seen exponential growth in price. And so why would this trend stop if it's just continuing to trend up like this? Same thing with silver. But when you think about silver, silver has only just now retaken the highs that it had back in 2011. So I actually think there's going to be a rotation out of gold and across into silver. So if you are looking at this analysis and this thesis, and you're sort of saying, okay, well, 10 years ago, silver was 1/5 of the price of gold. And now silver is significant. Like there's multitudes of price differential between gold and silver. But silver is used in all of the technologies that we have, all of our phones, all of our microchips. So it's actually a precious metal that is not as abundant as gold, but is also being used more and more. So that there's potentially going to be a undersupply of this particular precious metal, particularly when you have a look at, well, what are some of the other precious metals that have really moved in the last little bit. So you've got gold, platinum, again, has gone exponential. And so you've got these big moves. So there is definitely a rotation into these types of precious metals and these commodities. Oil, again, look, even when we're looking at that longer time frame, we've just seen that continual trend down. So a really good thing to do when you're looking at your charts or trying to make a decision on which bias you want to have over the longer term, and if you don't want to be day trading, if you want to be looking at trying to swing trade on a longer time frame, either on a 4-hour or a daily or an 8-hour candle, then you want to be looking at these really longer time frames, 3 months, to really have a look at an idea and see where we're going to see some support and resistance. Because when you zoom out, it does become a lot clearer. You get a lot more information packed into one candle, and then a lot more information packed into one chart, so you can see those big macro moves. So like with gold, like we can just see that gold is heading north. Back here when it broke 2000, which was back in 2000 and 2012, it had a bit of a sell-off. Then it really just sort of kept bumping into this sort of ceiling that we had here. So if you have a look through here, this was a resistance. There was a significant area of resistance. We had 1, 2, 3, 4, 5, 6. So, there was just consistently every quarter, it was just couldn't get over that $2,000 mark. But then we had, we broke, we closed above, and then we just have not come back and retested this. It's literally just gone, price has gone vertical from there. And you'll see that with a lot of, in a lot of charts as well. So if you have a look at BTC, this is BTC dominance. So this is just looking at Bitcoin. Sorry, let's look at this one. This is just looking at Bitcoin. Let me just take these off your chart. So just having a look at Bitcoin again, takes out a lot of the noise, and we're just seeing price continue to trend higher from these lows. So if we're looking at a price target of sort of 400,000 or 500,000 up here, this is a long way away. This cycle, and we do get an 80% and a 60 to 80% drawdown, we're looking at the market potentially going. Let's have a look at this. Where's my drawing tool? The market could go up, trend down, and come back up. It could trend all the way down to here. And if it does, before it goes back higher, but we don't know that. No one knows that. But what we can see on the chart is we can see. What we can see in the chart is here, we are definitely in still a bullish phase. And all that we've got here is just a blimp. If we then look in at a weekly chart, we've really only just retested these all-time highs before. So when you look at the retrace, yes, it was a volatile retracement. But realistically, we've just come down here and retested these highs that we had before. So this area through here was actually always going to be a support. If we can't maintain price above 110 and we start to test this area that's of 100, then if it breaks below there, we could look at seeing a retest of price back down here at sort of 70 to 80,000. And that's why I also use these boxes to determine zones, because price is not going to come in and directly hit off 100,000, although it did pretty much just bounce off 105, and then reverse. It's going to come into particular zones until buyers start to come in. That's selling pressure or buying pressure gets bought or sold up, and then the reversal will take off from there. But very volatile times that we have seen here. I'm not going to go into too many charts today. I really just wanted everybody, I guess, if you know someone in the crypto world and you definitely check in on people, make sure that their accounts and their mental health are still okay. It's a very, very traumatic time. If this is the first cycle that you've been through and you haven't really lost large sums of money, you know, when you're in big bull markets, you feel like you can do no wrong and you just continue to print more and more money. Well, this is where all of that money mindset and psychology with trading and investing really comes into play, because Warren Buffett, I quote him all the time, when everybody is fearful, you should be greedy. And when everybody is greedy, you should be fearful. And the people that made the most money were the ones that potentially sold out at those tops, thinking that the market was a bit toppy, with a bit frothy, with that like big pump, and then also the buyers that came in and said, "Well, BTC is 100,000." I think Sui got down to $50 or 50 cents. It was wildly low. So look at this wick down. It's got down to but like $2. So it's from $5 down to $2 over a period of time. So it's back to prices all the way back in November 2024. So yeah, this really is a time to learn, and the community needs to come together. And if you aren't following a trading plan, if you are trading leveraged perpetual products or options or any type of derivative, and you don't truly understand how to trade or your risk profile, and you don't have stop losses in place, I really implore you to start building more robust trading plans and strategies, and be more mindful of the risks that you take. Happy Tuesday. Trade your plan and create success in life.